Ladies and gentlemen, welcome back to another stock market crash. It seems like every other day markets are either rallying or crashing, and today is no exception. AMC stock was the exception earlier in the trading day when the stock was going parabolic, pretty much straight up. Ever since then, we have been falling off a cliff, and we're almost at new lows for the day. Guys, this is an intraday update on AMC stock to give you all of the information and the data that you need to know. Let's talk about what is going on today. AMC now down about 2.81%. First things first, before we look at that, we gotta talk about the Ortex data because there is changes to this data here today. Short interest is climbing yet again, up 0.36% on the day, sitting at about 19%. 96.77 million shares currently sold short, up about 350,000 shares here on the day. And you are seeing there is not very many shares available to be sold short. It looks like that period in which hedge funds and market makers and institutional investors that were willing to lend out massive amounts of shares is all but gone. And that came last week due to the rumor that AMC was restructuring. Now we know that is not necessarily the case. And AMC was not restructuring. AMC Networks, basically the bondholders were revolting against the stock, making sure they could cover their asses if the company went bankrupt. It did send AMC down. It beat us off the path of, this bullish rally that we were on, and it flooded the markets with a lot of shares that were available to be sold short. We were looking at over 1 million shares every hour of every trading day. After that, I can even go back to it. Look, December 9th, you're seeing millions of shares available to be traded every single day. This pushed down the cost of borrow rates. This let more hedge funds flood the markets with shares because they didn't have to worry about the lack of shares at that point or the shares going against them, right? AMC going up, they just spread a rumor. So it helps them on multiple fronts. You're not seeing as much of that actually happening today with very few shares available to actually be sold short. Cost of borrow average sitting at about 23%, cost of borrow max at 26%, and cost of borrow minimum at about 19%. Now, guys, these numbers did just update a little bit more. Now the live short interest of free float is up 0.5% today. Now you're sitting at 541,000 shares that have been sold short here today. So you just jumped up 200,000 shares. Now, in regards to what is happening to AMC today, if we look at the volume so far, that's going to be a key to this. And we've only had 15 million for volume. So when you take out 500,000 of just sell volume, and you also look at the option activity, which we can pull that up right here, sitting at a 6% positive order value and $1 million worth of options on AMC here today. That's going to cause a lot of hedging to the downside. Now, these numbers looked a lot different earlier in the day when AMC started to rally, and that's the kicker of all of this. That's what is happening. They want the stock to rally at points to try to suck you in and then push the stock down. It is simply trying to mentally unwaver the apes, right? They're trying to mentally take out that factor of the short squeeze is going to happen. Now, they cannot do that. They wish they could. They cannot do that. That's not going to influence us. Hopefully, by and large, people understand this game that they are playing, and that's exactly what it is. Like, look, AMC is hitting a new low, and the markets, they're not even reacting, right? They're just letting the stock fall and pushing it down even more, guys. So what's the black and white silver lining to this? And I think the silver lining is pretty clear. The lower AMC goes, the less risky it is for people to hold on to their positions, to essentially say, hey, what's the risk to reward? What's the probability this thing goes down another 50% or goes up 50%? And I think the risk to reward makes a lot of sense here with AMC. You can even see it just randomly. You're going to get these pops, but it's not the short squeeze. The short squeeze hasn't even started yet. The short interest continues to climb and hedge funds continue to short the stock. So by definition, the short squeeze trade is still very much here, but the hedge funds want you to think it is not, that it is not going to happen, that you should sell your positions. And I am obviously not a financial advisor, so do not listen to me. Do what you want to do. I do not know your financial situation, but if you've been holding this whole time, I think it's pretty safe to say it makes a lot of sense to continue to hold, guys. Not financial advice, but that is what I am doing. Now, let's talk about other broad market factors as well, and then we're going to dive into a little bit more on AMC for the day as well. So what we're seeing today is the S&P 500 down about 2.5% currently. This is from bad retail sales that came out earlier in the day, like pitiful retail sales. And we'll go ahead and pull this up right here. It says retail sales fell 0.6% in November as consumers feel the pressure from inflation. Retail sales for November declined 0.6%, even worse than the Dow Jones estimate for a 0.3% drop. So 100% worse. Weekly jobless claims fell to 211,000, a decline of 20,000 from the previous period, and well below the Dow Jones estimate for 232,000. Fed surveys from the New York and Philadelphia regions showed contraction in manufacturing activity in December. So this is not good for a couple of reasons, right? The fourth quarter, holiday quarter, tends to be the largest quarter for not only sales, but for just consumer spending. And you tend to get a pretty good gauge of optimism or pessimism heading into the next year. And the data that we're getting today is definitely not looking very optimistic. So this is helping the markets to fall here today. Not only did you get bad retail sales today, yesterday, Fed Jerome Powell basically dropped the hammer on the markets and said, we're not getting any rate cuts in 2023. We're only going to get 1% of rate cuts in 2024, and that terminal rate is going to be higher. So by the end of the year of 2023, the Fed is expecting 5.1% for the federal funds rate. Some Fed members, two of them to be more specific, we don't know who, have their eyes set at 5.5% federal funds rate by the end of 2023. Two of them are thinking 4.9%. So even if you look at, where Fed members are, the odds that we're under 5%, very, very low by the end of the year. So that's already higher than market expectations. We were expecting a quarter to 50 basis point rate cut by 2023. So the Fed funds rate was expecting 4.5% interest rates roughly by the end of 2023. Now we're hearing 5.1%, but you also have 7 members that think rates will be 5.25% by the end of the year. So that's really offsetting market expectations by 50 to 75 basis points. And that's something the markets are grappling with today and figuring out where valuation should be. Because if rates are higher, then those dollars of earnings, those EPS dollars, should be valued lower. And especially as you're getting retail sales that are just terrible, right? These things that are forerunners into a recession, that's not going to be good. And we are at a state in the markets where I do think bad news will start to be bad news. Bad news will no longer be good news. Good news will be good news because the markets are going to be worried about a recession rather than the Fed tightening, because the Fed's basically saying we will, not cut rates if a recession comes. Like, you're screwed. You're on your own, markets. As long as you let us keep raising rates, we will keep raising rates. And that's exactly what is happening. And that's what is happening today. The markets are trying to figure out what that means for valuation. And that's why you are seeing the dollar is up 0.89% on fears that the Fed will just continue to raise rates. So that is fundamentally negative for companies. Now you are getting the bonds, which bond yields are dropping today. This is the wildest part, because if bond yields are falling when the Fed says they're going to keep raising rates, that means the bond market is basically telling the Fed that they're wrong. They're basically giving the Fed the finger. They're saying you're not going to be able to raise rates as aggressively and hold them there as long as you think you can. So for context here, we got that massive rally in August, right? We've already rallied in the bonds about 21.5%. The rally in August with the bonds from the low to the peak was only about 12.5 or about 11%. So there's a big disconnect what is happening in the bond market compared to the stock market, guys. And it is a little bit worrisome because if the bonds keep rallying, it is off of fears of a recession, not Fed tightening, and a recession will bring the real downside for the stock market. In regards to AMC, as the stock market does fall, this does begin to be a little bit more bullish for AMC, especially as you do have blockbuster films like Avatar that are coming out here on Friday. Avatar comes out, and throughout 2023 you're going to have a lot of blockbuster films as well. That becomes a very bullish thing for AMC, because hedge funds are going to start to get squeezed out of their short positions. And that's possibly even what happened here in the morning today. You could say some of this buying was some shorts having to hedge their positions. I don't necessarily think they were covering, but maybe a quick couple hedges here and there. That is what could have caused this rally, due to liquidity starting to dry up and starting to run very thin. Guys, that is pretty much going to be all for this video. Like I said in the last video, you want to watch this level at about $5 per share for the downside on AMC. Notice how we're just bobbing back and forth. There's a lot of support around $5 per share, so do keep that in mind. That will be important. But also the 50-day moving average, that is serving as a level of keen resistance, and that is something that we definitely want to pay attention to. Another bullish indicator, the inside bar did just flash yesterday, so that will be interesting to see how that does play out. Nonetheless, guys, it's looking like a very choppy day on Wall Street. Be prepared for anything, because today has been a crazy one. Thank you guys for watching. We'll be back at 4 p.m. with the broad market update, as well as AMC, as you guys do know, to wrap off the trading day and get you guys started in the rest of your day. So hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.